Okay, welcome everybody again to our channel Future Finance KHF. Today I want to introduce something very unique that's gonna help stock trader make better decisions in terms of investing in the stock market, and that the better decision can be made only by disqualifying and qualifying stocks um with a good informative decision. How do we get to that point? I have invented an app. It's called OneClickStock, as you see it written right here. This OneClickStock app, it makes everything possible in one click. I want to talk first of all about the roots, where the idea of the app came from, so you can understand perfectly what is the app trying to tell you. First of all, the idea came from the desire of doing something super fast, very time efficient, and reaching results that can be closer to reality, results that will be more accurate than whatever you see out there, because everything you see out there, it needs a lot of time to conduct and to reach this result. You either have to read or you have to dig very thoroughly through financial statements of companies that you wish to invest in, so to find out that if this is a good company, if this is a bad company, is this a good price, is this a bad price. So a lot of concerns that every investors have, but one common concern among all investors is the following stuff that I'm gonna write on the board right now. Okay, so what is this main concern that all investors, all stock traders, we're talking about stock individuals that do not go through investment companies to conduct their trading. We're talking about individuals that initiate the trading on their own and buy and sell on a daily basis. Okay, so what is the must concern? First of all, there is a company concern. Okay, is this a good company or a bad company? Bad or good? Okay, the second concern we have, let's say this is a good company. Is it a good price or bad price? So you are concerned about the price of the company. Is it a good price or a bad price? Is it a good company or bad company? The third concern that investors have is that, let's just delete a little bit from the top. Okay. The third concern that you're gonna have, or you have, or most of the investors, or all the investors actually have, is that how soon I can generate a profit. So far we have three major concerns. The first one is this a good company? The second one is what is a good price? Is this a good price or bad price? So if you want to invest in it, you are still concerned about the price. And the third concern is how soon I can generate a profit. So the first concern that was about the company, okay, company. The second concern was about the price, and the third concern is about returns, right? Okay, what does these three concerns say? What do you need to do in order to answer this question of these three questions? In order to find the answer of these three questions on the company side, you need to dig into their financial statements, right? You need to be able to read their financial statements. So we're talking about their balance sheet, we're talking about their income statement, you're talking about cash flow, and you're gonna be able to know how to read this and make sense out of it. So that's gonna take time if you're trying to invest and make money in a short time. You're gonna actually spend a lot of time digging in each company. So one thing we can say from that one, that it is time consuming, and I'm intentionally writing that in red because everything is red, meaning that you need to be cautious of, because time-consuming process that will most of the time make you either get tired of trying to find out whether it's good or bad, or or miss other opportunities because you're consuming, you're spending, you're investing a lot of time on one company to find out first of all if it's a good company. You didn't still yet dig into pricing to know if is this a good price, even if it's a good company, is this a good price? So you consumed a lot of time trying to find is it good or bad. That's if you know how to read financial statements. So you're gonna spend that time, or you're gonna go and look at ratios. You're gonna go look at different ratios, graphs, and charts, and a lot of people do this in different ways. Okay, so they, beside digging into financial statement, they still look at ratios, look at some technical tools, and they look at the graph, they look at the history. So it is a big time consuming. That's why this one here, it tells you that this is a lot of time. It is time. That's a big word. It's time. Okay, so the second thing you want to find out is pricing. Okay, let's say you did your homework as far as if this company is good or not. You find out that okay, the company is good. So what's the second thing? Who tells you what is a good price and bad price? How do you know that? There is not a single formula tell you out there that this is a good price or bad price. So there is a lot of theories, and all these theories, a lot of them contradict each other, and a lot of them not doesn't really fit the reality, fit the facts, or fit whatever on the financial results of the company. So that's another concern that you're gonna be, and you're gonna be doing a lot of investigation. You're gonna be trying to find out a lot of sources to tell you, okay, is it a good time to invest? So whether you have a small budget or you have a big budget, it's still the same importance of concern. Because if you have a lot of money and trying to invest a lot of money, so that's a big concern because your risk is a lot higher. If you have a small money, also you don't want to lose that small money. You want it to grow. So that is the same thing. You have the same risk basically, because that's your only hope. That is all what you have. You cannot risk it just like that. Okay. The third thing is, so that's as far as also that is time consuming. Again, time consuming. Time is playing here, is playing here. The third one is, let's say you found out what's the best price. You found out the statement is good. So now you're good here, you're good here. So now you have the third one also. What is that? Who tells you what is the return? How soon you're gonna generate this profit? So again, you're gonna dig here and there, and you're gonna try to find out how soon you can expect. And there's not a single formula over there that tells you how soon, because nothing is connected to each other. Because you're taking some information from here, you're taking some information from there. A lot of theories, a lot of different stuff that doesn't connect to each other, and not even a single one method that connect these three aspects together: financial statement, price, and return. There's a lot of things out there that's gonna get you lost. It's time consuming again, and you're gonna be confused, and you're gonna waste a lot of time. By the time you find out that this is three facts, let's say, okay, you reach a conclusion, let's say, regardless whether it's good or bad, let's say you reach a conclusion, but you spend a lot of time. It is time consuming. It is time consuming. Okay, you're going through a big puzzle that really is not gonna lead you into a good position in terms of reaching result in efficient way and closer to reality. Okay, so this is what we did right here to save you time, to actually give you a great result, and to be careful in terms of how you're gonna manage your risk, because there is one factor here. Okay, this is the name of the app again, one click. We're gonna go to the app store and type it and find the app, and I'm gonna show you that app. Okay, so we spoke about the company, okay, about the company, spoke about the price, we spoke about the return, we said the time consuming to dig and do it on your own. It's time. Okay, you're killing yourself. So what we did with OneClickStock, okay, what we did with this formula, that we answered all these questions in one click. How good that can get. In one click, you'll be able to answer if this company is a good company, what is the best price to buy it, okay, and how soon I can generate profit. Now, how does this app do all that? So here we get to the functions of the app, and from here we're gonna go to the App Store, and we're gonna type, okay, we're gonna type the name of the app. We're gonna type right here, OneClickStock, and we're gonna see it right here, OneClickStock Future Finance. Click on it, here it comes, and you will see it right here. So OneClickStock Future Finance is a company actually that is that owns the stock, okay, that owns the app, I'm sorry. So OneClickStock, so it does that, all that work that you are consuming, that you're gonna spend a lot of time to do, the app does it in one click. All you have to do is get the ticker code of the company. Okay, this is the app right here. That's how it looks on your desktop. It's right here, this one right here in the bottom to your right. So you click on it like that, it opens like this. There is 3 buttons in the bottom. This one says home, this one, and there is one in the middle that says stock, and there is one that says about. So you can read about it. It tells you what does this app do, which is I'm going to explain here. The one at the bottom that you're gonna use is the one in the middle, which says stock. So basically here in the middle where it says enter stock ticker, you're gonna put that stock ticker, and then the app is gonna tell you all the result that you're looking for. So let's say, now we're not gonna talk about strategies, how to manage your investment, what you should be looking for. We're just gonna pick any company. It doesn't matter if it's a penny stock or a high-end stock. So we're gonna put there, let's say we put Microsoft. You just type MSFT. It's not a case sensitive, so you just type it as long as the spelling is correct. So you type in the correct code, then you're gonna get a result. You might, here and there, you might not get a result because the company is located outside the United States most of the time, but if it is in the United States, most of the time you'll get all the results that you're looking for. So Microsoft, MSFT, just click on get best options, and the app is gonna tell you everything right now. Here we go. Okay, the first lines on the top is just telling you, this is just actual data, actual facts that is pulling about the stock price. What is the stock price right now? It's 276. So this is no formula played in there. It's just actual facts is coming out. It's 276. That's the current stock price. 52-week low, it's 241. Okay, this is facts. 52-week high is 349. The volume, average volume, 26 million. Okay, there are important things that we, in different lessons, we're gonna read about the importance of volume and why it's important to look at high and low as far as the 52-week value. Okay, but right now, this is the app is pulling those just to put them in front of you. And then you can build later when you learn later how to benefit from knowing this information. But now the app is gonna generate the results you're looking for. As far as best price, the app is telling you here, it's giving you 5 options, okay? What does it say? It's not recommending anything yet. It's just saying, because the app has a recommendation tab, which is right on the bottom. Okay, so besides telling you about the price, telling you about the company, telling you about the returns, it's gonna tell you, give you a recommendation that's up to you whether you listen to it or not. But if you listen to it, you'll do better. So best price is telling you for the stock to buy it is up to 138. So anything up to 138, that is really the best price to buy Microsoft at this time, at this point. Like today, let's say today now the market is open. If it was below 138 and it's giving you this result, let's say it's recommending to buy it, it's saying then the best price would be up to 138. Okay, the second thing is saying up to from 138 to 212, that's considered a good price. So if this was to be falling in there, then it would be falling in the area or the category of good price. If it's falling below 212, if the current price is below 212 and over 138. If it's more than that, up to 318, then it's falling in the category of fair price. Okay, and then more than that is up to 589 falling in the category of risk price. So between 318 and 589. From 589 up to 1,000 and above, then here you're going to the red zone area. It's risky price to buy. Okay, so it's listing those, but don't get the app wrong. It's not telling you yet whether you should buy it or not. Okay, now the price of the stock is 276, so it's basically fallen in the fair price category to buy, fair price to buy, right below 318, 276, between 212 and 318, 76, 276 be fall in there, so it's in the area of fair price to buy. Okay, let's move to the next one. Is this a good company to finance, to invest in? So the app is saying financial status of Microsoft as it is now, it's weak. So that could be for a lot of reasons. A lot of companies, especially the ones that they generate a lot of revenues, not necessarily, but a company like Microsoft generates billions of dollars in revenues. So at this period, it could be the reason why it's saying it's weak, because they are most likely their debt ratio is over 50%. And because of that, the app is suggesting that this is a weak sign of their on their balance sheet. If any event in general, if you are in stable situations and you are generating a lot of money and you go over 50% in your debt ratio, you might be still confident that you can pay it because business is going as usual, and then you can pay and you can meet your debt requirement and pay your times on bill because you have a lot of revenues coming, and you're working and everything is going fine, the environment is stable and all that. Now, in situations like the one we are in, where a lot of things going on as far as political event, wars, and recessions might be coming, and all that, for companies, we're talking in general, we're not talking just about Microsoft, in general, companies that go over their 50% debt ratio, they might, at any point, they might have a disruption in their operations because of these events that's going on. And that is gonna be affecting them pretty bad if their debt ratio is more than 50%. That means they have bills that they cannot cover. It could be a short-term debt they they cannot meet at that point because they have a disruption of income, or it could be a long-term debt that is due at this specific period of time. So here, without knowing all these details, the app collected already the data, put it into the formula, and decided that the financial statement, the financial status of Microsoft comes as weak, and it's rated 4. So rated 4, there is a 1, 2, 3, 4. So rated 4 is not the worst. So the worst is when it's rated 1. Then you are bankrupt. So 4, it's weak, but it's from 1 to 10. It's still a bad sign, so we're gonna see what comes next. It's still, the app's still not telling you invest or don't invest. It's just now stating stating like an opinion based on reading accounting information, financial statement, ratios, historical data, and all that. So it's coming up with this result, with this unique formula that is made to generate this results. So now volatility is coming as one. What does volatility mean? What does volatility has to do with return? Companies that they have higher volatility, they move a lot. They could be super active, meaning their volume, just like Microsoft, is 26 million a day. That's a high volume, but they can still be not too volatile because they're not moving up and down that much. They're kind of steady. At one point, Microsoft was volatile, looked like it gave us a result as a super volatile, but right now it looks like it's steady. Okay, so right now it's steady, it's not moving up and down too much. So what this has to do with result, if you are a short-term investor, if you are investing in a company that decided, or let's say you were recommended to buy, you bought and you invested in that company, and if this company is volatile and you bought it at a very good price, and then most likely you're gonna generate profits at a short period of time. If the company is not volatile, most likely you're gonna wait before you start making money. That's why volatility and returns are connected. And it could be on the other side. If you buy the company, if it's not recommended to buy it and you buy it and it's volatile, so most likely you might expect loss, because if it's moving up and down too much and it's not recommended to buy it, and it's saying don't buy it, or it's saying risky to buy, then you might face a decline in the price at a short period of time, and then the value of your money is going to go down. Okay, so right now we spoke about pricing, we spoke about the financial status, about volatility and its relation, it's how it's connected to returns. And that's how from volatility you know if you're going to expect returns in a short period of time, or you're going to have to wait more than expected or longer time. Now the third tab the app has is recommendations. So what does recommendations tell you? It tells you if you should invest in this company or not. You don't have to listen to it, you don't have to follow it. But it's better for you to do so, because you're gonna do better. And you're gonna find out when you use the app that this is a trustworthy tool to base your decisions on when you decide to invest in stock. Okay, so right now it's saying about Microsoft that their price is risky price, watch and re-evaluate. So right now the price that is falling in the fair price, you see that even though it's in a fair price, it doesn't mean it's gonna say buy it, or it's gonna say fair to buy it. It has nothing to do with that. The recommendation came as risky price, watch and re-evaluate. So basically it's telling you wait, don't buy, keep your eye on it. If it falls, you know, things might change, or if something comes up, things, but don't buy at this point. It's telling you risky price, watch, and if you buy, it's telling you risky price. If you buy and it goes up, it's a possibility, but most likely you're gonna face a decline in value, because there are other factors that the recommendation is based on. All these factors: volatility, financial status, and the current price that is over there. It's using a lot of data, using a very solid formula that's taken information from a financial statement, from the history record, and from all kind of ratios that were invented to serve the purpose of this app. And it's coming up with this recommendation that's saying that Microsoft at this price, at this condition, it's a risky price, watch and re-evaluate. Okay, so this is how the app functions. I'm gonna be talking more in the future in depth about more of how to understand the function of this app. This is a very primitive idea, but it is a detailed idea about how the app functions. Try it. It costs $1.99 a month for subscription. There is a 3 months, 6 months, and 1 year subscription, but you can try it for 1 month. If you're not getting result, you didn't lose anything. If you're getting the result you're looking for, then it's good to keep going with this app. And the other thing that we're gonna talk about is I'm gonna do a separate video about strategy and how to connect with strategy with the use of this app, so you can benefit the most, because your strategy and how in investing in the stock market also has to do with profitability, because the most important thing that you need to worry about when you invest in the stock market is risk. How to manage this risk. And this app, at the end of the day, this app is actually taking in consideration this very important factor, and how to monitor your risk based on a solid strategy, so you can benefit from the app and the strategy to get the best result at the end of the day. Thank you for watching, and looking forward to do another video and talk to you more in details about the app and other subjects. Thank you so much. You have a wonderful day.